in early trade. Not much of a handover from Wall Street, but back home, of course, it's been stable, it's been steady. While we've been arguing that it looks tired, don't think fund managers or traders or even investors, for that matter, are feeling tired at this stage.
Yeah, I suppose at this stage of the markets, you are going to have, a bit of a slowdown in that wild sort of appetites. And I think a lot of focus right now on fresh money being raised in the market, IPOs, QIPs, from NFOs, from the regulator to everyone. Everyone's talking about, the primary market, which is taking a lot of focus and sucking out the liquidity.
Yeah, so this week could be interesting from that perspective, but I mean, markets have been expensive, but the momentum seems okay. You have chocolate here, interestingly. So, are you celebrating something?
It is actually our hairdresser Karishma's birthday.
Ah, okay.
And I have been given a chocolate. I see neither of you two have.
I had one already.
She doesn't do anything to my hair, so I guess so. But yeah, from a market's perspective, sorry, just coming back to it, just that. I mean, liquidity may be sucked out this week, but who knows? The momentum seems okay for now.
Yeah. Nothing much to take away from global cues, so we'll go through it very, very quickly. US markets were shut, so nothing much on bond rates as well. But it is going to be a big week for data, and I'll just pull that up for you, why it's going to be a big week for data. So that's the roll call. Tuesday, you have the August ISM manufacturing index data. Wednesday, the July durable goods order. We're missing a D there. Thursday, ADP payroll data will come in, and on Friday, August US jobs report. Crude is going to be an interesting story to track because crude prices have been trending downwards. They continue to do so. OPEC Plus is expected to increase output, and there is concern about sluggish demand in two of the world's largest markets, China and the US. So you have Brent at about $76 per barrel levels. Asia's been mixed kind of in open this morning, at least. Nothing too exciting happening there. And we'll just pull up that implied open once to show you what the picture is like for India. 23 points up. So we'll open up, but again, I would say it's been lackluster overall. Pull up the fund flows from yesterday, and yes, we did technically, close okay. Foreign investors were buying again, so foreign investor numbers have been coming in positive for quite a few sessions now. 1735 crores there, 356 crores of buys from domestic investors. But if you look at yesterday as well, folks, it was just a few stories here and there which were actually seeing momentum. It was all about Gujarat gas and the Navratnas. Broader markets were quite tepid.
Yeah, broader markets were tepid, but interesting pockets. I mean, we talked about consolidation, for example, with standard disclosure, and I'm sure I'll just get to the trade setup in a moment. But just this point, 1 month of consolidation in the Adani Group stocks. Yesterday we saw a spurt coming there. We've seen in the month of August, after months and months of consolidation, the Sanjeev Goenka Group stocks had seen a big spurt, right? So selective pockets the market seems to be finding. The momentum, to my mind, in my trade setup today, and then the momentum seems to be intact. Just that yesterday I spoke to multiple people. Everybody's saying that even if they were bullish, they are now starting that every incremental rise, they will raise some bit of cash. And one key issue for almost everybody seems to be that banks are looking skittish. And fundamentally, with the credit growth numbers that are coming out, banking numbers don't quite look that strong. In fact, their conversations with select banks seems to suggest that sluggish credit growth and maybe margin compression could hurt numbers as well as sentiment in the build-up to the numbers as they start getting released in October. So maybe, just maybe, Bank Nifty doesn't. I remember Samina saying yesterday the Bank Nifty needs to perform for the markets to inch higher. I wonder how will the Bank Nifty perform if a lot of people are just skipping banks altogether in their portfolios?
Yeah. So, I was just going to add to that before you come in, Samina, that your concern is valid. The fundamental concern about deposit growth is not going away anytime soon.
Yeah. And I think yesterday what we've seen is while banks are attempting, participating, it's the heavyweight banking names that are not being able to pull through. PSPs, on the other hand, I think are showing some early signs of buying that's emerging once again in that space. But if you look at the F&O data, and I do agree that the markets are looking slightly tired. I mean, we've had 13 straight days of gains. That's never happened in the history of our markets. But currently, when you look at the F&O data, what we are seeing is that call writers are significantly outnumbering put writers. This usually means that the markets may spend some more time consolidating but this time around with a little bit of a negative bias. As long as 25,300 is not crossed, that is going to be your immediate sort of level that the bulls will want to take out for further upside on the index. On the downside, no one is talking about any big corrections. I think those days are behind us for now. 25,000 does act as a very important level of support in terms of the Nifty. In terms of open interest as well, 25,500 and 25,700 has seen maximum call OI. Now, why is this important? Because over the last few months, the range is been moving upward. The markets are making higher highs, lower lows, which usually is a positive symptom in that sense for trade. In terms of what happened yesterday, it's rotational. Niraj has already highlighted that for you. FMCG and IT did quite well. Metals saw some selling. Pharma saw some profit taking. Banks, we've talked about how we're not being able to participate. PSBs, on the other hand, are seeing some buying interest that's emerging. So that could be one space I think I would watch out for over the course of the next couple of days for some positive traction in terms of buying interest. Well, that's of course what we have in terms of the broader market. But I think the bigger story remains stocks and our markets with earnings season now behind us a few weeks. The news flow has slightly improved. Brokerages may not have been coming in thick and fast, but lots happening in terms of counters to track. One on top of my list this morning, while we will talk about the IPOs and everything that's happening there from Muttu to the Bajaj twins, but a quick mention of HAL. And I think this one's important because the stock's been a little lackluster. We know with all those conversations about taking profits off the table, if you're a defense stock owner, this morning, I would imagine HAL to get a little bit of a gap up because these counters have also been underperformers. The company has sold 240 aero engines to the Indian Air Force. This is coming at 26,000 crore rupees. So that is the revenue or that is the total sales value that HAL has sold these aircrafts to the Indian Air Force. It's under the Buy Indian category. So this is a big one. The stock should be getting an upward move on this news flow. Not sure this is already factored in their order book or, of course, guidance. But for now, sentimentally, definitely a positive. I have another one. It's been the season of fundraising, like we've talked about. This time around, it's Brigade Enterprise. You know, a lot of those real estate companies have also been hitting the markets. We had Prestige last week who talked about a massive fundraise plans of 4,500 crores. This morning, it's Brigade Enterprise. They are looking to raise money as well. They've set a QIP price of 1,164 crores, which is at a 5.5% discount to yesterday's close. I'm not sure about the quantum of the size of this Brigade Enterprise fundraise, but this one is going to be an important one to track. The stock will react, and of course the supply will more than likely get snapped up. Another one to add to exits is Medi Assist Healthcare Services. Now, we've seen a number of the promoters exiting their stake in Medi Assist after its recent listing. This time around, its promoter Besmer Indian Capital, which holds shares with 550 crores. They will look to sell this through a block deal, and the shares are again at a pretty significant discount, a 7% discount to yesterday's close. The stock was up 5% in trade yesterday, but this morning wouldn't surprise me if we get a gap down. But that comes into the disclaimer. We've had QIPs, block deals, fundraising at discounts, and the markets have snapped it up, and the stocks, contrary to textbook knowledge or information, have moved in the opposite direction, which is upward.
Yeah, you can't really tell with the QIP action. Just on Brigade, just overall, one thing on real estate, top performing index last year has been in the complete boondocks for the last several sessions, and interesting to understand what's happening there fundamentally, or is it just fatigue setting in? All right, three stocks that I'm looking at, Keynes Tech, definitely one of them. And that news, the cabinet decision news, came in at the very, very last minute of market close yesterday. So you might see a bit of a run-up today coming in. You had a sell-off yesterday, but you could see a bit of a run-up. So now here's the thing. In their Q1 con call, the company had talked about setting up this plant in Gujarat. It's going to cost them about 3,300 crore rupees. The cabinet has approved the proposal for this new semiconductor manufacturing plant in Gujarat. That's the important detail over there. It has a capacity of 6.3 million chips per day. Revenues from this unit will start flowing in by FY26. Now, the company has already 4 MOUs with customers, but they actually want to see the plant before they ink the deal, and now they have the go-ahead from the cabinet for that plant. The company expects revenues of 3,500 crores by FY30 from the semiconductor business. So now why this is interesting is because India's push to make semiconductors domestically is something that the government is full steam behind, so that kind of support will definitely be there. We'll also be speaking with the company later in the day to figure out whether their revenues do flow and what adds to this, apart from the 4 MOUs they already have.
Yeah, I mean, and just the other piece that Morgan Stanley, for example, in their note have laid out for Keynes Tech, they say that, one, that this pending, independent of the price targets, etc., they say that the pending government approval remain an area of investor concern, and now that the approval has come, presumably that concern goes away.
Just a quick one.
Sorry,
just
let me
the OSAT. The PCB approvals are still awaiting.
Yeah, but for OSAT itself, that's the point. So their management has said that the OSAT venture could garner incremental potential revenue of 3,000 to 3,500 crores by FY30, and that the company has already received positive indications from 4 large customers.
Yeah, that's what I just said that in their
you were not there, but the management confirmed they obviously moved their plant from Karnataka to Gujarat because there was a delay on approvals, and they already have 3 confirmed clients who've shown interest, and they've signed the dotted line. So Morgan Stanley's agreed with what the management told us as well.
No, I'm not saying, what I meant, I'm not saying Morgan Stanley is saying something new, but for MS, all of these points become a very big factor of optimism for this, for the brokerage.
So that's important, Niraj, because the question is whether the street has already factored in this. And at the end of the day, the fact that Ashwini Vaishnav, the union minister, has come and said it in the cabinet meet, and that Thappa has come, I think will be a bit of a bump up. That's why we're marking this as a thumbs up for the company. NMDC, not so great. That's a bit of a thumbs down. They received a penalty order of 1,620 crores for alleged transport of iron ore without a railway transit pass. I'm not sure how that happens, but this is part of their business update. They also say in their business update that there's a 10% decrease in total production in August. There's an 11% drop in sales, so that will see a bit of a negative reaction perhaps. Sterlite Tech, now there are 2 ways of looking at this. They've settled a dispute with Data Management Center in Singapore for $467,000 odd over there, so that's a payout from their pocket. That's a negative, but look at the claim that Data Management Center was making. That's about 4 times. So maybe just, or actually even more than that. So maybe the fact that they've settled for lesser could be seen as okay for the company, but that there is a payout, after all, will perhaps be seen as a negative.
Yeah, interesting names out there. I have just 2, and one is actually a brokerage note on a stock that did really well yesterday, which is Gujarat Gas. But first up, Adani Green. And that's a very interesting one because while the stock was up and active in trade yesterday, the news flow is positive. There is a JV agreement with Total Energies Renewables, and as a part of the JV, Total will invest an additional $444 million to form a 50-50 JV, which will manage a 1,150 MWAC portfolio, including both operational and under construction solar assets. With the standard disclaimers, of course, that the Adani Group owns NDTV, and you're watching NDTV Profit, the fact remains that there is this vote of confidence by Total because they were an earlier investor in Adani Green way back, and they have continued to invest, and this latest round of investment marks a large marquee organization enhancing their exposure to one unit. So it could have, to any unit, it's a positive. Even for this one, maybe that is probably one reason why the stock was marginally active in trade yesterday itself. But not MS on Keynes. I'm talking about, thank you, I'm talking about Adani Green. And the other one is Gujarat Gas. Now, the stock was up 12% yesterday, and different brokerages reviewed differently. I thought the Morgan Stanley note, wherein they've come out and said that the bull case for Gujarat Gas is very positive, is interesting. So they say that the merger with GSPC implies a potential upside of 70% to earnings and 20% to NAV. Now, this is factored in the stock because it's a very expensive stock, and their base case price is about 615 only versus the current price of 680. But they say that the power assets could add to further re-rating, and their bull case target price has gone up. So they've raised the bull case for Gujarat Gas, and they say that if everything works out, then the bull case target price is 899. So clearly some people saw the positives yesterday in this one. I was surprised really with the price movement, but well, Morgan Stanley seems to agree with the price movement, and if everything works out, their bull case could actually is very high, and the stock could move higher, who knows.
Just one quick one, because we've talked about this and we will move on to Bajaj Housing in a minute, but it's Premier Energies. I don't know if either of you have looked at the subscription. The subscription was 75 times in the 3 days that the IP was open to subscription, and we've had fantastic debuts on the exchanges in the last couple of months. But Premier Energies is expected to list at 110% premium to its offer price. 937 rupees in the grey market. 450 rupees is what people would have gotten at if you was, or that was the upper band of the subscription. But this one, I think, was stellar. We've seen 40%, 45%, 60%, but 111% upside on the get-go at 10 a.m. this morning. I think the promoters are laughing their way to the bank, or will be laughing their way to the bank.
You know, I think we'll just pull up what SEBI has said yesterday on IPOs. Just ties in well with what Samina has just mentioned. And before we go into Harsh on the hottest IPO on the block, so they have a paper out yesterday on investor behavior. And just talking about the fresh IPO today as well, Samina, 54% of IPO shares are sold within a week of listing. Individual investors are selling 50% of allotted shares within a week. So out of that overall picture of 54, mutual funds sell only 3.3% shares within a week, while banks sell nearly 80% of shares within a week. So, you know, that's also interesting. A lot of the listing gain story still very much exists.
And why not? I mean, here's the deal, right? I mean, look at the yesterday, Sai Arvind, our colleague, did that research about how FPIs have put in dollops of money into primary markets. So if the primary markets are active and kicking, and I've not reached SME, but I have an SME update too, but if primary markets are alive and kicking and people are making money on the listing day, flipping it is fine. I mean,
if you go in pre-listing, don't you get locked in for 6 months, Niraj?
The pre-IPO, yes, but if you're applying on a retail side, then you can flip.
Also on this, a quick disclaimer just on Premier Energies, right? Because this one is a niche player in the solar business, which is great. And it has some very marquee institutions who've come on. So unlike the other ones that we've seen, this one has ICICI, JP Morgan, Kotak Mahindra Bank, and a couple of, I think if I'm not mistaken, a couple of big banks from Singapore as well have bet big on this. So this one is, I think, also fundamentally a solid company. So while there is that froth, but I don't know, I think Premier Energies might have a fundamental story going for them
Froth
as
is
well.
also maybe subjective to that point. All right, one...
just before, we're talking about subscription, guys, just before we go. There's an SME subscription that happened yesterday, travel and rentals. It's an IPO update that came in yesterday. 12 crore IPO. Received applications for 7,700 crores.
This is Yamaha showrooms that they have?
Travel and rentals, but
no,
this is not Yamaha.
That's resourceful,
644 times oversubscription. This is some crazy stuff happening in the SME space.
Okay. So now we've talked about all the frenzy bit. Here's the solid one. Harsh is joining us. He's been standing by for a while. Harsh, the IPO of Bajaj Housing Finance. We have the price band. We have more details. Tell us.
Well, yes. Let me first start off with the basics with regard to where Bajaj Housing stacks up. In terms of the IPO itself, it's a 6,560 crore rupee IPO. 3560 is the fresh issue. Bajaj Finance, which owns 100% of the company, is set to sell 3,000 odd crore. And now we have the price band, 66 to 70 rupees a share. And to that, I'll add the valuation picture as well. But more details. Well, shareholder reservation. Promoters, those who own or are shareholders in the promoter entities, 500 crore is the shareholder reservation, but you need to hold the stock or the share in your demat account before the 30th of August to be eligible for this. Now, bids for anchor investors to start 6th of September. We're moving on to dates. 9 to 11th is when the IPO will be open for subscription. 35% reserved for the retail category. In terms of what stands out for this company, AUM has grown at a 72% CAGR from FY18 to FY24, maybe on a lower base, but 72% on an AUM size of almost 1 lakh crore is extremely strong. Currently, what's the current growth clip? Around 31%, which is also the strongest in the industry, even now as we speak. The current AUM, as I did mention, is 97,071 crore rupees as of Q1 FY25. In terms of PAT, well, I spoke about AUM growth, 72% CAGR. PAT has grown at 136% CAGR, possibly a sign for times to come. 136% growth annualized. Now, just in terms of ROAs, they're on an improving trend, and the current ROA stands at 2.35 or 2.4 odd %. That's where the ROA currently stands at. Let's switch focus to asset quality. It's got best-in-class asset quality currently. GNPA is at sub 0.3%, and NNPA is at just about 0.1%. Capital adequacy continues to remain strong despite this listing, which will further add to the capital adequacy and growth clip in terms of bandwidth. Lastly, with regard to valuations, Bajaj Finance trades at 5.5 times. Bajaj Housing, the current book value per share roughly computed by us is 19 rupees. This is pre-money, this is pre-listing, and at a band of 66 to 70 rupees a share, it's currently priced at 3.7 times price to book. So very interesting one. Well, in terms of where peer valuations stack up, Bajaj Housing at 3.7, but look at LIC, PNB and Canfin Homes, cheaper. Some slightly in line or more expensive will be an Aadhar, Aavas, Aptus and Home First. That's how they're all stacking up in terms of peer valuations as well.
Thank you for that, Harsh. This is a big one, and the street's going to be quite excited about it. Along with this is also Muthoot's subsidiary that's got IPO approval to raise about 1,000 odd crores. So that could be one more stock to track in early minutes of trade. A quick check. We talked about HAL and how they've bagged a significant order from the Indian Air Force. Remember, HAL's order backlog had stood at 94,000 crores, and this was at the end of FY24. Now bringing it to about 1.2 lakh crores after this big order win. We've got Anushi standing by with more on this. Anushi, with this expanded backlog, HAL now has a strong revenue visibility of 3.8 times its TTM revenue is what I believe. A couple of brokerages like Antique have already given out an aggressive buy call on the stock. You want to walk us through the significance of this order and what it means for its revenue, revenue visibility?
Hey, morning, Samina. So as you mentioned that it's quite a large order win that we are looking at for HAL. First, let's just talk about the order in general. What is this order pertaining to? So HAL has received the government nod to procure Sukhoi aero engines, and this is at a cost consideration of about 26,000 crores that we are looking at. And these aero engines order that we are seeing is for about 240 aero engines for procuring these aero engines. Again, this will also have a 54% of an indigenous component as per the defense in general, the theme to bring higher indigenous component from here on forward. About this aircraft also that we are looking at, so Su-30 MKI, it's a twin jet multi-air superiority fighter aircraft which is developed by the Russia Sukhoi and built under license by HAL. Now, if you have to look at the delivery updates for this 26,000 crore order that we are looking at, deliveries are expected to start from next year onwards and will continue. The supply will continue for a 8-year period from there on. Coming to the order book performance, as you pointed out, a 94,000 crore of an order book that we looked at the end of FY24, and they expect that this outstanding order book by FY25 end should be anywhere in the 1.2 lakh crore of a bracket range. In this also order book that we are seeing, 47,000 crore of orders are expected to materialize in this 1-year time frame itself. Coming to the valuations, also the other aspects of the business, if you look at the trailing P, that was about 41x, while in FY25 to 26, it more or less remains in the similar range of 40x for FY25 and 26, about 35x. It goes down in this year onwards. Coming to the stock performance, HAL, as in the defense holds back, has been one of the strongest players. While the 1 month return, it's been 2%. The defense sector in general in this 1 month has been under pressure. If you look at the 6 months and the 1 year return, that has been on the stronger side. 46% of a return in the last 6 months, while in 1 year we are seeing about 136% of a return. Coming to the last piece is the analyst recommendations. You pointed out the aggressive strategy of Antique having a buy rating. But overall, if you take a consensus view, 12 hold about a buy rating, while 1 has a hold rating and 2 sell rating. So which implies about a 12% upside potential from the current levels that we look at. So this is the whole just on what is happening in Hindustan Aeronautics, how significant this order is, and the company's total order book, which stood at about 94,000 crore at the end of FY24.
Anushi, it is an important one. In fact, Antique has also said that HAL is fairly valued despite a 66% jump that the stock has seen in the last 1 year. They are expecting a potential multi-year double-digit earnings growth on HAL, and this order is, of course, taking the order book to 1.2 lakh crores. So it's a big win for HAL, hoping some. And with these defense stocks, if you have one counter that does well, the whole sector usually picks up, right?
And this is coming on the back of a month of severe underperformance, right? Defense has been very, very sluggish.
It's been on the sell side, in fact.
So so because that is happening, you need positive triggers. Now we all know that these orders will be spread over multiple years, so on and so forth. It adds to an order book which is already large. Everything granted, but there is a whiff of pessimism out there. This kind of thwarts that a little bit for HAL at least. Let's see if it gets passed on to the others.
My only point to that is where that pessimism is coming from, Niraj, is the size of defense allocation in the budget. Which to a lot of players in the industry and those who watch it felt that it was not as much as was expected. Now that overnight is not going to change. A lot of these orders have been put in place from before, so perhaps there will be bigger triggers needed to fundamentally change that direction.
Also with HAL, I think one good thing that stands out in this one is the IAF has said that they're not very happy with HAL's speed of execution. So they've actually urged HAL to go out and ensure timely execution of this big order win. So while this will be spread over a few years, HAL is a counter to watch this morning. And if I had to think about this, I think BDL and the rest of the sector also could see some buying on a sentimental impact. But keeping the focus on the cabinet and its approvals, the cabinet has approved a proposal to set up a semiconductor manufacturing unit worth 3,300 crore rupees in Gujarat. Kane Semicon will set up a plant with an expected capacity of 60 lakh chips per day. The chips produced at this unit will be used in industrial automotive electrical vehicles, consumer electronics, telecom and mobile phones, amongst others. Let's listen into that bite.
सेमीकंडक्टर भारत के भविष्य के लिए, भारत के मैन्युफैक्चरिंग के लिए और हमारे देश के लिए स्ट्रैटेजिक इम्पोर्टेंस है इस इंडस्ट्री की. इसीलिए इसके ऊपर एक लॉन्ग टर्म व्यू रखा गया है. मिनिमम 10 साल का व्यू है, जिसमें फर्स्ट फेज में जो प्रोग्राम्स आए इसमें डिज़ाइन के लिए, मैन्युफैक्चरिंग के लिए, रिसर्च के लिए, एजुकेशन. आपको मैं ये भी बताना चाहूँगा 113 यूनिवर्सिटीज़, 113 यूनिवर्सिटीज़ में अब सेमीकंडक्टर का एडवांस्ड कोर्स करिकुलम चालू हुआ है और स्टूडेंट्स को नए टूल्स दिए जा रहे हैं जिससे कि वो प्रैक्टिकल ट्रेनिंग ले. और लैम रिसर्च के साथ मिलके जो सेमाईवर्स यानी वर्चुअल आप एक फैब के अंदर पहुंच के उसका जितनी मैन्युफैक्चरिंग का काम है वो कर सकते हो, उसका पहला बैच भी अभी ऑलरेडी ट्रेनिंग ले रहा है. तो हर चीज जो एक पूरा टैलेंट, फैब, एटीएमपी, रिसर्च एंड डेवलपमेंट, डिजाइन, इकोसिस्टम के पार्टनर्स, इन सब के ऊपर काम कर रहे हैं और अगले फेज जब अप्रूव होगा तब आपके सामने लेके आऊंगा.
All right. Time for an NDTV profit exclusive. India is likely to announce by mid-September a third iteration of a successful EV subsidy scheme, that's FAME 3, with stepped up adoption of electric mobility in the world's third largest automotive market. Tushar joins in with more details.
By the middle of this month in September, there may be some good news for electric vehicle makers as the FAME 3 subsidy scheme may come into effect. That's what sources are telling us. What we know so far is that all stakeholders, be it in the government, the Ministry of Heavy Industries, the Finance Ministry, Niti Aayog, as well as the auto industry lobbies are more or less on the same page as far as the rollout of the FAME 3 subsidy is concerned. At this point of time, we do not know the outlook outlay for the scheme. There's still a bottleneck. They're still trying to align the process of registrations and the outgo of the subsidy eventually to the consumers. That still needs to be figured out. But why is this important, so to speak? Remember, FAME 2 in the last 5 years, from FY20 to FY24, actually kick-started the adoption of electric two-wheelers in India. That gave rise to the likes of Ola. It allowed Bajaj Auto and TVS Motors to enter this space. And at this point of time, I think due to actually FAME 2, the penetration of electric two-wheelers right now is about 5 to 7% of the overall two-wheeler industry. What also, after FAME 2 expired on 31st March of this year, a stopgap arrangement of EMPS 2024 scheme came into play. That had an outlay of 500 crore rupees. FAME 2 itself had an outlay of 11,500 crore rupees, and it affected 13 lakh electric vehicles over the course of 5 years. So essentially, we are looking at least that kind of an impact from FAME 3 as well.
Well, this could be an interesting one too to focus on. But as we gear up for trade today, with the implied open suggesting a flattish start, it pays to try and understand what is it that the derivative markets are suggesting in the session today. Agam, as usual, is waiting by to tell us that. Agam, what cues? Good morning.
Good morning, Niraj. Well, at the moment, we continue to advance the Nifty, making advancing for the 13th straight day, and well, closing at a new life high. But underneath, we're now starting to see a little bit of weakness in the broader market indices, and that perhaps could be a little bit of a problem. It could potentially lead to some consolidation. A correction, though, is a little less probable at this point in time, but you never know. For now, we are continuing to see addition in open interest towards the September futures, 7% added towards what potentially could be seen as more longs. And the Bank Nifty, again, that's where we haven't seen too much change as far as the open interest is concerned. In fact, marginal change there, even as the index advances by around 0.2%. Now, as we move into this week, and we have about 3 sessions left before we see the Nifty weekly options expiry, what we are seeing at the moment is further writing around the 25,500, 25,700 calls, and that particular 200-point range could potentially, serve up as a little bit of a resistance zone. And on the lower end, it is essentially 25,000, where we're seeing a lot of put writing coming through, and that could potentially also be a little bit of a support in the near term. Now, let's not forget that technically we are in uncharted territory, which means that there potentially couldn't be any resistance at the moment, but based on the kind of options writing that we've seen around 25,500, 25,700, we could potentially see a little bit of resistance there. Yesterday was a day of trade where we saw one gainer for one loser in the broader markets. And in terms of those belonging to futures, again, some weakness coming in Hindustan Copper, ABB and Dr. Reddy. So we saw fresh shorts there. Among stocks that saw unwinding, a decline in open interest, there was long unwinding for names like Sun TV and Balrampur Chini, and perhaps Dalmia Bharat was one of the few counters which in fact did see advances coming through with short covering coming on. But that said, let's get in an expert for an opinion here as to what we can do with these markets. So we have Amit Goyal of Amit Ventures who's joining us on the show. Amit, good morning. Thank you so much for joining in. Let's start off with your view on the benchmarks and an option structure that you are deploying at this point in time.
Hi, good morning, Agam, and good morning to all your viewers. It's always good to be back on this channel. The way I see the structure in Nifty as well as the Bank Nifty, which are the broad indices, is that we are structurally bullish. We have been, giving a smart recovery from the lows which we created in the early part of August on account of yen carry trade unwind. But as you rightly pointed out, that we also are now seeing some signs of fatigue getting creeped into the rally. Nifty and Bank Nifty both, if you look at the candlestick patterns, have been kind of showing signs that they would want to consolidate here. Probably a time correction with a slight downward bias on both the indices is my view. For Nifty, I would wait to go long. It's still a buy on dip opportunity here. So any dip towards 25,000 with the maximum OI on the put side, which is the support, if it comes there, then I would like to build a long structure there. I do have, however, a trade on Bank Nifty for tomorrow's expiry. So if you allow, I'll explain that to you.
Go ahead, Amit.
Right. So in Bank Nifty, if you look at the price action, I'm fairly, while the structure remains bullish, but I do see, as I mentioned, that there is some amount of weakness creeping into it. And hence, I would like to play a very short-term bearish put butterfly, which is basically known as a broken wing put butterfly with a bearish view, in which we will sell 51,000 put 2 lots and buy wings of 51,500 and 50,800 put 1 lot each. The max loss in this trade is calculated to be about 2,400 rupees, and we will aim for a target of 2,500 rupees with a margin of 33,000. The logic here is, if you look at yesterday's price action, the open was equal to high, which is a sign of some resistance building up at the highest open interest call strike, which happens to be 51,500, from where the price has taken some bit of resistance. So I'm playing for the downside, and if you look at the put open interest, the highest put open interest, which is at 51,000, so if I were to look at the path of least resistance, it happens to be on the downside. Hence, I'm playing for the downside for tomorrow's expiry.
Just a follow-up question here, Amit, because you are buying just 1 lot against 2 lots sold. How do you manage your risk in this case? You have suggested that the maximum loss that you'd want to bear is around 2,400 rupees per lot. But can you give us a little bit more in terms of how you would manage risk here?
So this is a broken wing butterfly in which we do have 2 lots of put buying. The strikes are 51,500 on the upside and 50,800 on the downside, while selling the 51,000 put 2 lots. So this kind of gives me an imbalanced wing with closer wing on the downside. So what I'm expecting is, if there is going to be any sell-off in the next couple of days, I'm at least assured of some profit on the downside. So the risk in this trade is only on the upside, with a maximum risk of, it's a defined risk strategy, with a maximum risk of 2,400 rupees. Hence the calculation of 2,400 rupees on the downside, yes, on the upside.
Yeah, right. I mean, that was my miss actually. I did not fully comprehend it. But yes, point well taken. Let's move on and talk about the other stock that is also on your radar, Amit.
Yeah, so I'm trying to, move away from where the action is, Gujarat Gas, GSPL, Geo Finance, right? I'm trying to look at, when I look at the chart of Reliance, which is, while it has also mimicked what Nifty and the broad indices have been doing, but if you notice Reliance's chart, it does have a pivot resistance at about 3,200 and a pivot support at 2,900 levels. With the market at 3,000, it has an even Steven gap on 200 points on both the sides. Hence, I would like to play a non-directional setup, simply because the logic here is the subdued price action over many sessions, the oscillators indicators pointing towards a neutral stance, with a lot of the oscillators giving a neutral indicator signal, and the concentrated OI around the ATMs suggests that Reliance would probably struggle to give a breakaway move on either side. Given this view, I would like to set up a short triangle with a neutral view stance for the 26th September expiry, wherein we look to sell the 3,200 call on the upside and 2,860 strike put 1 lot each on the downside. The rupee stop loss in this trade is going to be around 5,000, and we will aim for a profit target of also 5,000 rupees. Giving us a 1:1 RR with a margin of 1,20,000 rupees.
Okay, so a simple and straightforward, short strangle on Reliance Industries with the expectation that it remains range bound. Amit, on that note, thanking you for joining us and taking us through your views, and of course giving us these 2 option structures to work with. But do remember that we have started a new query section on the F&O show as well. So if you do have any queries regarding potential bets that you want to place, or if you need an opinion on, bets that you've already placed out there, well, don't forget to WhatsApp your queries to us on the number that's flashed for you on your screen. And with that, it's back to you, Samina.
Thank you for that. And that's at 10:30 a.m. is when we take up those queries on the FNO show. Well, the implied Nifty is indicating to flat to slightly lower start this morning. We said that to you. Remember, the call writers have currently outnumbered the put writers on the street, which usually means the markets may spend an extended period of time consolidating with this negative bias. It's been 13 straight days of gains, and you want to be mindful of that. There is signs of tiredness and fatigue that are obvious on the street. And I think also what stood out yesterday was broader markets, have been struggling. So they've not been able to do as well as the index or the Nifty 50. So leadership has largely been coming in from the frontline space. But it's always about stocks at this time of the day. Let's move on to one sector that's catching our attention, and that's the real estate space. Nuvama has come out with a note on Lodha Suntec, where they do maintain a positive outlook on these counters. Puneet joins us with more on that. Puneet, does it look like it could be a day where real estate stocks could be bought on back of Nuvama's report?
Well, definitely, a positive note coming in from Nuvama, and specifically they're talking about the Mumbai real estate market. The numbers are out for August specifically, and they have mentioned that, the housing units registered in Mumbai are up 7%, coming at roughly around 11,600 odd units. Now, the total value of this is up 31 odd percent to come in at roughly 17,700 odd crores. Now, for the year to date, from year to date to today, the registered units are roughly around the 1 lakh mark, around 96,000 units. This is up 15% on a year-on-year basis, and they are mentioning that healthy leverage as well as potential rate cuts are likely to improve sales in Mumbai going forward as well. Now, this should benefit Mumbai-based players. They've specifically spoken about Macrotech as well as Suntec Realty, which is a buy for them, while the other two companies are a hold, which are Obro as well as Godrej Properties. They have mentioned that Rustomjee also might have some benefit going forward, but overall, this report is on the back of the unit registration sales, which come in on a monthly basis, and it is positive on specifically Macrotech as well as Suntec today. Back to you.
Thank you for that. Those are some of the brokerage notes to watch out for this morning. Puneet there with more on that. But let's quickly take you through what is on NDTV Profits watch list this morning. And these are some of the stocks that could move or definitely have positive news for them. So good for the company in any case. Keynes, the cabinet has okayed its semicon unit in Gujarat. Welspun Corp will be investing $100 million in US pipes. Matrimony is to consider a buyback. HAL will be seeing engine buys, 240 engine buys for 26,000 crore rupees. Bajaj Finance, there's no more benefit for Bajaj Finance shareholders because that record date was 30th September. Maybe sentimentally, Bajaj Housing IPO has come in with its price band as well.
A bunch of other stocks which are on the red list. It's a sell on Sterlite Tech. They've settled a dispute in Singapore, but that's come in at a big price, and NMTC is hit with a penalty of 1,620 crores. So those are a few counters that could be seeing some selling in today's day of trade. But we have with us Rajat Bose today, SEBI registered research analyst, joining with a view on the markets. Rajat, good to always have you on the show, or rather, it's always good to have you on the show. A quick word on the index. It's been 13 straight days of gains. It's been a stable, steady market, no volatile moves. The VIX is under control. The PCR ratio is in favor of the bulls. The one thing that stood out yesterday, though, is the number of call writers have outnumbered put writers. Do you feel like there is early signs of fatigue and tiredness, and maybe for the next couple of weeks, the upside on the Nifty is capped?
Good morning, Samina, Tamanna, and Niraj. Good morning to you all, and thank you for having me. What I would like to say here is that we talk about fatigue, we talk about the 13 sessions are already through. Each time we see the Nifty incrementally closing higher. Normal case, it should have given at least a 2 to 3 sessions or at the most 4 sessions of correction. Even that has happened last month, but this is not happening till now. What I would say is that you look for this, that if the yesterday's low is broken, then there will be some weakness. That is about 25 to 35, if I'm not mistaken. And once that is taken out on the downside, then you can expect some kind of weakness settling in. Normally, Nifty doesn't give 13 up sessions in a row. It doesn't happen, but this time it is completely a different kettle of fish. And I would say that unless we fall below the 25,000 mark, that is the 9-day exponential moving average level, not precisely, but roughly that 25,000 mark is the very important level. On the upside, now suppose if 25,300, which I have been referring to for quite some time, 25,300 is the Lakshman Rekha. If Nifty manages to get past that, then there would be an attempt to scale up to even 25,400 or 25,422. 422 is the is double of what was the June 3 high and the June 4 low. So the total excursion on the downside, if you multiply the excursion level, range by 2, you get 25,422. So that will act as a resistance, and after that, 25,500 would also be crossed if 25,422 is decisively taken out. The next Fibonacci level would then be 25,911. Well, you talked about put call ratio. That is 0.7 market wide as per today's one of the pink newspapers, which gives all the data. This shows that actually there is too much of call writing and not so much put writing. This is generally a positive sign for the market, because people are writing calls, yet people see when it goes to 1.3, 1.4 put call ratio, then we say that the market, conventionally, that is the overheated market levels. But this, because it is going up in a trend and going up in a very regular, measured kind of movement that is happening, it is very difficult. This kind of movement I have seen last year in CNX Midcap. We used to get flabbergasted by the kind of move that CNX Midcap was positing at that point of time. Now, even Nifty is behaving in that fashion. So instead of saying that it is too much on the upside, maybe there would be a correction. But unless 25,000 is broken, this will be only an intraday correction.
Okay, so Rajat, if that is indeed the case, good morning to you. How are you positioning yourself on the stock side? Are there long calls, or is there a mix of long and short? What are you doing today?
I'm going long in two counters. I'm not going myself. I'm suggesting two counters in which long positions can be taken. One is Cummins. You will see a kind of similarity between, say, Hindustan Aeronautics and Cummins. Hindustan Aeronautics has something backing it, that the semiconductor thing. But if you look at Cummins, the Bollinger Band is constricting, and there was an uptick yesterday. That's a green candle. And now this kind of a situation gives a good rise where I can back it up in case of HAL, with the news item. I can't say the same thing about Cummins, but I think it is going to go up, and the stop loss should be 37.09. It closed at 38.12, but I'm giving targets up to 39.37. That is the maximum target. Prior to that, 38.63, 38.89. And if 39.37 is crossed, it may scale up to levels like about 4,000, 3997. The second stock that I would like to discuss is that IndusInd Bank. IndusInd Bank posted a low, say about a fortnight back, and after that it has started moving up. The significant event that has happened yesterday was the 200-day exponential moving average has been decisively crossed. At least it's a long green candle, and it had a lot of buying in it. And so I would suggest that one can go long in that stock. Bank stocks did well yesterday, but this was the best one in my opinion. So I've given, I'm advocating this. 1417 should be your stop loss, 1475, 1505 and 1530. These are the three targets for IndusInd Bank. Of course, these are neither of the two are intraday calls. I don't give intraday calls. These are short-term targets in both of them.
Short-term targets on both of them. These are not intraday calls. I don't know whether we got a view from you on Bank Nifty, and we've been debating that for the last few weeks now, Rajat. We do believe, from our understanding, that we would require Bank Nifty to participate to bring the momentum back. I mean, the index has been doing really well, don't get me wrong, but for the big moves, how well placed do you think Bank Nifty is? Do you feel like it warrants a long trade right now?
Well, even though Bank Nifty doesn't get as much focus as, say, the Nifty, because Nifty is steadily moving up. But if you look at it, even though there had been a correction for 2 sessions, and after that, the last 10 sessions, Bank Nifty is actually on an uptrend. And this uptrend has begun with a morning star kind of a formation, which is a bullish formation. And in the process, it has crossed all the short and medium term moving averages like 50-day, 20-day and 9-day exponential moving average. Now, the immediate level to watch out for, if it manages to stay above 51,400, 51,650 will be the target. And if 51,650 is taken out, then we might be headed towards, say, 51,900 to about 52,000. But I must say that since the trends are either 11 sessions, in case of Nifty, 13 sessions up, there could be a sharp 2-day, 3-day corrections that can happen at any point in time. So be nimble-footed or nimble-fingered, I would say, and then you manage your trade.
Okay. Sunny Agarwal also joining us on the show this morning. Good morning to you, Sunny. He's Head of Fundamental Equity Research, SBI Cap Securities. Sunny, I want to start by asking you about the auto pack. Now, yesterday it was all a buzz, some good, some bad, depending completely on the numbers that have come out. But now moving beyond auto numbers, is this a space where you see a further upside, anything you're liking in the auto pack, or you think it's time for it to cool off for now?
Yeah, good morning everyone. Good morning, Tamanna. I think yes, within Autopack, what we are witnessing is that two-wheeler is a space where there is a healthy volume growth during the last 5 months, and at the same time, the outlook continue to remain constructive on two-wheeler side. So I think two-wheeler is a place where one can hide in auto sector. Within two-wheeler also, I feel companies like Hero MotoCorp, a very great set of numbers, backed by likely improvement in performance in the quarter, September quarter. So Hero MotoCorp is our top pick. Bajaj Auto, again backed by the launch of new CNG vehicle, which is getting a very good response. Three-wheeler portfolio doing well. Export is recovering. So I think Bajaj Auto is our second pick. TVS Motor also again firing all cylinder, but slightly there is a concern on valuations. Otherwise, what I feel is that in terms of financial performance or operating performance, TVS Motor is also doing equally good. But in terms of valuation, I think it's fully priced in. And again, the same sector can be played through auto ancillary name, which are focusing on two-wheeler. So company like ASK Auto, which is a predominantly two-wheeler focused company. Similarly, Endurance Technology, which is again a predominantly play on Bajaj. Munjal, which is again a kind of play on Hero. So few auto ant names which are predominantly linked to two-wheeler sector. So these are the few names which we like among the auto and auto ant names.
Okay. By the way, the news flashes just went away. Sunny, thanks for that. The news flashes just went away, but Medi Assist, a large trade, has taken place already, 13.5% equity. It was expected to happen at a discount. Now we'll need to, I just want to, I wish the flash was there, but just to try and figure out the pricing at which it has been done.
1164, I think.
Okay, 1164. No.
No, sorry, pardon me. That was Brigade's QIP.
Yeah, Medi Assist was expected to happen at a 6-7% discount. We'll try and figure this out.
It's supposed to be at 570, which was a 7% discount.
Yeah, so I think at 617. So they have done it at 617.85 only, if I'm not wrong. Wow, that's happened at the current price. So pretty interesting, actually. Just before we go to Rucha, who is waiting by, Sunny, a quick word on Medi Assist. There's a large equity that was expected to change and has happened, has presumably happened at the current market price. Do you track this one fundamentally?
Sorry, Niraj, I don't track actually, but I like the space wherein the entire health insurance segment, wherein the Medi Assist work on a TPA side. So I think the future is bright for the entire sector. But in terms of current number and what is happening in the company, sorry, I am not updated on that current as of now.
Okay, well, so that's Medi Assist. Let's see how it opens up post this large trade being done already. But there are a lot of other stocks that you need to keep an eye out for. My colleague Rucha Johnson to tell us about some that should be in focus this morning. Good morning, Rucha.
Good morning, Niraj. I'll start with Adani Green Energy. Now, the company has approved a JV pact with Total Energies Renewables for a 50-50 JV where Total Energies will make further investment of $444 million. Now, the new JV will house 1150 megawatt alternative current, which is a solar power project. Now, this will be a mix of both operational as well as under execution solar assets. Now, moving on to Jinsol Engineering, this company becomes the lowest bidder in consortium with Matrix Gas for a green hydro energy project, which is worth around 164 crore of rupees. Now, this will be India's first biomass green hydro energy project, is what the company mentions. Moving on to Brigade Enterprises, it has approved the QIP price of 1164.7 per share to be precise, and this implies a discount of around 5.5% to yesterday's close. But moving on to Muthoot Finance, the microfinance subsidiary Belstar has received approval from the market regulator to launch its IPO. The company plans to raise around 1,000 crore. Now, this will be via fresh issue, and 300 crore will be via offer for sale. But moving on to Medi Assist, where 13.5% of equity change hands in pre-market large trades, but the shares will likely be sold at 570 rupees per piece, which is again a 7% discount to the current market price.
Thank you for that, Richard. There's a whole bunch of stocks you want to watch out for. Medi Assist, block deal has already gone through. 13.5% stake has changed hands just before the markets open up for trade. We don't have the exact pricing. The expectation is it comes in at a 7% discount to the tune of at a price of 570 rupees a piece. And the promoter was looking to sell 540 crores through a block deal. We'll take a break. Implied Nifty is indicating to a very flat start this morning. We'll take you through all that and more in a few minutes, so stay with us.
Welcome back. Just a couple of minutes to go for the first pre-open rates to hit. We're speaking with Rajat Bose and Sunny Agarwal this morning and telling you what should be on top of your radar. Rajat, let's start with your take on HAL and extend it to some of those defense plays. HAL has a bit of good news today. We'll have to wait and see if it really moves the stock fundamentally. But in terms of other sort of defense companies, anything that you like right now?
Yeah, I would say that it is better to bet on HAL because, as I said, just like Cummins, its Bollinger Band is constricting, and the 50-day moving average, which is around say 48.09, if that is taken out by HAL, then definitely you will see a sharp up move, because whenever the Bollinger Band constricts, it means that volatility is low, and generally it opens up with a big bang move either on the upside or on the downside. That kind of a thing, there is fodder for that. So if that can happen, it will happen today. So I am expecting that 4700 will be crossed, and it will cross the 50-day moving average as well. So there is a good upswing that can happen, but whether you will be able to enter that or people will be able to enter that at lower levels, that is a big question.
Okay, what about Gujarat Gas after all the fireworks yesterday, Rajat? And of course, GSPL?
See, regarding Gujarat Gas, I would say that Gujarat Gas, this is what I was trying to refer to in case of HAL. See what happened yesterday. There was a huge volume, and it began with a gap up opening and almost, or rather even better, the earlier high posted, say about a month back or so. That kind of thing, once that happens, you know that the cream has been lifted. So here, if you are a long-term investor, then you can enter at current levels. Otherwise, wait for a decline. Generally, this kind of a move gives a bit of decline. You have seen that in many counters in the recent past, like Tata Technologies, which moved up from the lower levels, bottom levels, with this kind of a candle, and then there had been correction. Same kind of correction might happen here. 650 to about 670 would be a good entry point if one can get that.
Sunny, do you have a word on Gujarat Gas and GSPL? Both the stocks were in a breakout yesterday on the back of the demerger. Brokerages are upbeat. The demerger plans have largely got an, a thumbs up from the street at least. Even the brokerages may not have aggressively raised their target prices on these counters.
Yeah, definitely the entire restructuring exercise is positive in medium to long term. But again, one has to keep in mind that the restructuring will take at least 12 to 15 months to get completely over, and then post consolidation, we will see the benefit of mergers flowing through over the period of next 24 months. So yes, if somebody has got a medium to long-term investment horizon, definitely it's a positive move for the shareholders of both GSPL as well as Gujarat Gas. Short-term, yes, stock has reacted positively, and I believe that maybe post cool-off one can add in the portfolio. But again, one has to keep in mind that the merger exercise will take at least 12 to 15 months to get over. So in long term, definitely there are multiple synergies which will emerge out of this entire merger as well as demerger process, where the transmission businesses will get demerged and will get listed separately.
I'll take a quick call from you on a stock that was a consensus buy call across a lot of technical analysts, and that was ITC yesterday. FMCG's managed to hold itself quite well in trade yesterday too. Do you think ITC or any of those FMCG names could make a good trade for the near term?
Is it for me?
Is it for me?
Rajat, that's for you.
Okay. ITC definitely looks good. If it manages to get past 512 and sustain above that, then you can expect at least a move of around 20 to 25 points on the upside. And yesterday's closing should be your stop loss, that is 510. But I'm saying that first see if it manages to stay above, say, 512, 513 kind of levels. Once it does that, then you enter and put a stop loss below 510.
Okay. Well, that would be an interesting one. Now, some stocks, and I know it's early days as yet, but maybe the Adani Greens and the Canes and the Medi-Assists of the world are reacting. So individually, Adani Green, flat as flat can be though. Canes Tech about 1.65%. Medi-Assist, once the deal is done about a couple of percentage points. So maybe closer to the price, because we don't know the price as yet, but the expected price was about 570, about a 6-7% discount. So these are a few to certainly keep in mind. We're going to be talking to Canes Tech. Actually, we talked to them last week and they confirmed some of these, but now that they've gotten the final approval and with Brokerage is saying that this removes a big investor overhang, could be an interesting one to talk about in the session today as well. Rajat, to you first. Some of these stocks have really done well, but every single point of time, I remember Canes Tech was expensive at 2200, 2300, then went to 3000, was expensive, currently at 4700 because the earnings growth is backing it up. How do the charts look, Rajat?
See, the charts are suggesting that the yesterday's move showed a completion of correction. Chances are that you would see this stock going up today, and if it starts going up, then expect the recent high to be taken out, because its chart patterns over the last few months had been like that. Once the correction is over, the earlier high is taken out and it goes further up. So my target, if it manages to get past the 5,000 level, then you might see 5,300 to about 5,450 kind of levels.
Sunny, very quickly, Canes or any of the EMS players, Dixon yesterday was down about 4%. Do you have thoughts here? Canes in particular, but any other also?
Yeah, so I think the today's development of getting permission to set up OSAT facility definitely augurs well for Cain in a long term. And it's a sunrise industry, semiconductor as a sector. I think obviously at a current juncture valuation may look expensive, but if somebody has got a long-term horizon, definitely earning growth is something which will back this valuation. In addition to Canes, we like Amber Enterprises and Sirma. Sirma is grappling through problem of product mix wherein the low margin products are getting sold. The mix of low margin products is on a higher side, that is linked to margin pressure. But what we believe is the second half is where we will see this correction, and again the margin will bounce back for Sirma. Amber, again a proxy play on consumer durable pack, especially on AC as well as railways. So Amber is one company which we like among the and in addition to Amber, EPAC Durable, which is again a kind of a proxy play again on consumer durable, especially on AC. So all these three names we like among the EMS.
Okay. All right. Harsh is joining us now for a key brokerage call this morning. Harsh, B&K Securities is what you've picked on GMR Power and Infra.
Well, yes, absolutely, Tamanna. Very strong commentary coming here. 38% upside is what they see on this stock. They've initiated coverage. In terms of the restructure, Airports has now moved out of the entity. 2022 was when the restructure happened. And now the core focus of the company is on energy, EPC and transport. These are the three areas which they'll continue to focus on. In terms of where they're going forward, one, installed power capacity currently at 3 gigawatts with regard to installations, as well as there are 2 gas-based plants as well, which they operate, 1.1 gigawatts there as well. That will likely see an active ramp up given the government thrust on power as well. So this will be a key beneficiary with regard to the government's power agenda going forward. Second, with regard to urban infra, they operate 3 highways, 2 on a BOT and 1 on a toll-based kind of revenue stream. And all those 3 will also continue to drive numbers for them, but growth, of course, in the infra segment, not low either. There's going to be a good thrust with regard to infra as well. They've also strengthened their balance sheet. Capital structure, currently now, they had around $275 million worth of foreign convertible bonds which have converted to equity and therefore puts less pressure on the financials. The balance sheet is now cleaner in terms of the borrowing number, and therefore BNK sees a cleaner balance sheet and good execution both on power as well as urban infra to drive the numbers going ahead. SOTP of 184 rupees, which gives around a 38% odd upside from here.
Thank you for that, Harsh. Those are a few of the stocks. GMR Power already reacting to BNK Securities note. The stock is up 3% in pre-open trade. A whole bunch of other names that may see activity. HAL is expected to see a 5% gap up this morning, so it's a big move coming on HAL. After many months of selling off, I think the day is back today when you see these defense counters to see, late or even double-digit gains in trade. So HL is looking good, Gains is looking good, Mazgam is looking good. Vedanta is also indicating to a positive start. BDL not too far behind. Insurance companies, Rajat, anything in the insurance pack that you like? They have sporadically been having good days in the last couple of weeks at least.
Rajat,
he's just looking at it.
I would like to talk about HDFC Life. HDFC Life yesterday posted a new high, but then after that it came down. But chances are that you would see another bit of attempt to pass yesterday's high, which was, I think, 754. Once 755 to about 760 is crossed, you can see 795 to 800. That is the kind of thing. It is looking bullish because the 9-day exponential moving average has not been tasted in either HDFC Life or even in other life insurance counters. They look pretty good. So there is some bullish trade out here in the life insurance space.
Okay, life insurance looking good this morning. So is defense. We're seeing auto also looking pretty decent this morning. Sunny, I just want to get a take from you on, and we've spoken about defense, but just a little more in detail, because look at a Bharat Dynamic, Garden Reach, Cochin Shipyard, Mazgaon. HAL is okay about the news and all of that. But if you had to pick among these, do you think that there is a sustainable upside, or is this the story of the morning or story of the day?
I think after a long time flurry of orders for all these PSU defense name, and that's creating a lot of excitement. I would like to stick with large cap names like BEL and HAL among the PSU defense side. On shipping side, definitely Cochin Shipyard is something where relatively valuations are favorable. And among the private player in the defense space, we like companies like Zen Technologies, which is growing by leaps and bounds, and companies like DCX System, which is again a small cap name.
I also want to get your take on the whole semiconductor play, and Keynes, of course, in focus today, but Dixon, some of those other players. Is this a fresh sort of leg of investment and upside that we could see? Remember, all of these companies will perhaps start seeing actual revenues from the semiconductor business only maybe 2 years out. Is this a time to build positions there?
Yes, definitely. I think very few projects have been approved as far as semiconductor is concerned. So Tata's semiconductor plant that is in a unlisted entity. Similarly, Crompton, yes, that's in a listed entity, CG. Keynes, yes, recently got an approval, and then smaller company like RIR Power and so on and so forth. Yes, you rightly pointed out that the numbers are still 2-3 years away. So right now, all the companies are in the capacity building phase, and actual number delivery will come after 24 to 36 months. But having said that, early mover advantage is something which this player will enjoy when this production kicks off in a full swing. And definitely it's the right time to accumulate gradually all these names in the portfolio.
Those are a bunch of semiconductor names of you coming in. Dixon seeing a little bit of flattening out after yesterday's sell-off in trade. Well, you also the big listing that's lined up at 10 a.m. The markets will be excited to see how Premier Energies opens in trade. 100% gap up from its closing price is what the street will be working with. We do have 2 more minutes, Rajat, but just before, I know you don't like to give trading calls that are too short in nature, but for the fun of it, one stock for an intraday trade.
Well, I welcome it today because I have a stock, I think it will be dear to you too, that is Adani Green Energy. I mean, the reason behind that is that, see, this stock has been moving within the moving averages, that is 9, 20 and 50 day. And on the upside, it is actually tested. It has completed its short-term correction. It has moved up to the Bollinger Band upper boundary. Chances are that you will see good movement happening here. Pre-open is 1947 as I see, but I think it is headed for 2000 plus levels, and it can even move up to 2150 kind of levels on the way up.
Okay. Well, standard disclosures, the Adani Group owns NDTV and you're watching NDTV Profit. There is a news flow on Adani Green, of course, which is the JV with Total, wherein Total is going to put in some money. But remember, the stock had gained 5% in trade yesterday. So that's having said that, the pre-open rates suggest specific pockets of strength, and especially stocks with news flow likely reacting to that news flow as evidenced in the pre-open session already. The question is, can banks support a further Nifty up move on a day when the South Korean inflation has come in below expected and has spurred some of those markets? It's a flat start. Banks marginally in the red. Actually, even the Nifty or the Sensex just bobbing between the red and the green. Hardly any moves there. Mid caps and small caps also should come up on your screen very quickly because there is nothing on the large caps. 0.25% for the mid cap space, and the small cap index will come up on your screen. About 0.5%. Let's pull up the heat map and see what's moving and what's not. So, even Stevens, the top loser, ICICI Bank, 0.5%, LTI, Bajaj Finance, Bajaj Auto. Yesterday's big gainer, Bajaj Finance, just pulling back a little bit, but no big losses, but more green. What about gainers? HDFC Life, Cipla, Asian Paints, Hindalco, Sun Pharma. Is it my belief, or is it a bit of a defensive bend because you see Pharma in Cipla and Sun, as well as HDFC Life and Tata Consumer out there being the list of the top movers? So on a day when it's extremely flat, no big decisive movers on the large cap space. Just the noteworthy point, Tamanna, is the slight pullback, if you will. Won't even call it a pullback on the Bajaj twins after yesterday's strong rally. Yeah.
Bajaj Finance definitely seeing a pullback. You have the IPO price that is out, and that pullback actually deepening right now, Niraj, if you see. All right, specific stocks. Let's talk about that because that's where the action is. I think HAL could end up being stock of the morning. Let's pull that up and see what's happening. After a long time, you have some movement in defense stocks and some sign of action. Not even that exciting, frankly, for the kind of market we've seen, but 3% up on open. All right, not too bad. All defense stocks are seeing some interest. So let's pull up a Cochin Shipyard, let's pull up Garden Reach, Mascow between 3 and 5% up this morning. Brigade is raising funds of 1,500 crore rupees. That's stock about 3.5% up. Fundraisers seem to be taken quite positively by the market right now. Kaynes Technology, we've been talking about, they've been talking about the semiconductor plant, but finally there is a cabinet nod, 6.5% up on Kaynes Tech. So that is also an interesting stock this morning to watch. Muthoot Finance in focus because their subsidiary has gotten a SEBI nod to launch an IPO. Flat movement on the stock, and Vedanta is the other one. Third interim dividend been given by Vedanta. That stock also just about 0.5% up in the green. So not too many movers and shakers. I think safe to say, Samina, defense is the story this morning.
Interesting, because HAL has backed the order, but that stock is up 2.5%. Its peers in the industry are trading with better gains. So Mascow Dock is up 5%, while HL is up 2%. Garden Reach is up 4.5%, and you've also got Bharat Dynamics that's trading with a little bit of a gain. A big gain actually as compared to its the rest of the market. Kaynes is the stock of the morning. Brigade is doing well on QIP plans. You've also got shipyard names like Cochin Shipyard that's trading higher. But I think market is looking for trading ideas in today's session. Most of them are fairly lackluster. Sona BLW is up 2%. Bombay Burma is trading with a 2% gain. Gujarat GMDC is up about 1.5%. A quick check on GSPL and Gujarat Gas. Both of those counters were big gainers yesterday. Let's see what they're getting up to today. Trading very, very flat as we see it. Take a look at Adani Energy. The stock was up 5%, but we're on the deal with Total. Rajat Bose had a constructive call on it, but it's trading flat as we see it in terms of early ticks on the street. On the sell side, on the Nifty 500, so there is a little bit of, the Nifty 500 is still not looking bad despite quite a few stocks that are losing. Signature Global is down 5% in trade. Matrimony.com is up 11%. There's some fundraising plan there, so the stock is doing well. Buyback on Matrimony. Orient Cement is up. Medi Assist, we saw that 13.5% equity change hands just before markets opened up. The stock is looking very good, 2.5%. So the supply has been lapped up, is what we expect. Aadhar Housing, if I can pull that one up too, should give me some idea about how Aadhar Housing is doing. The stock is seeing a 5% up move. So Aadhar Housing 5% higher, Matrimony is 11% up move. So there are small stocks that are moving well.
So Aadhar Housing, maybe because of this note from Kotak Institutional.
So that could be an aggressive buy call?
41% upside, target price of 550 from Kotak Institutional, saying that Aadhar Housing is standing out versus most affordable peers.
Yes, so that's the big one. And you on the sell side, you've got Signature Global that's down 5%. You've got PNB Housing that's trading low, PB Fintech, Oil India. You've got some of these asset management companies that are looking slightly weak. But all of this from the look of it is looking like healthy profit booking. Bajaj Finance, Bajaj Finserv, you've got the Bajaj Housing IPO price band. Both those counters also trading soft this morning. Neeraj, you want to?
Yeah, something that's working. We were talking in the morning that HAL's order, does it spur defense? So HAL, Garden Reach, Mazgon, all of them 4-5%.
And
right?
You know what's interesting? HAL is got the least amount of gains in the sector. So your Mazgon Dogs, Cochin Shipyard, Garden Reach are doing better.
I think perhaps one of the reasons could be, and we'll get Sunny's view also on it, that the signal after the cabinet announcement yesterday is that the government now getting back into term 3, getting back into that mode of putting out all of those orders. It had gone quiet for the last 6 months because of election focus, etc. So now you will see that whole cycle spurt up again. Is that one way of looking at it, Sunny?
Yes, definitely. I think, in fact, during the June quarter commentary also, many companies have alluded that there is a slowdown in terms of ordering, there is a slowdown in terms of ground level execution. I think with the yesterday's order, it seems that momentum is back, and we will again see the all the management guidance of order inflow getting with a narrative of likely to get met over the period of next 6 months. So I think, yes, that's augurs well for entire order book driven businesses, whether it's a defense or infra play.
Rajat, now that you've seen the first sort of rates hit and defense coming to the fore, anything that is looking more interesting on the charts or anything that you would want to add to your list right now?
Well, so long as HAL doesn't fall below the 50-day moving average, which is currently now at 47 or 48.10. If it manages to stay above that, then only there will be a good move. But be certain about one thing, that at any point in time, this might give a good move up. Adani Green that I talked about, that also looks good. I would say the best stock in my radar as of now, post-opening, is Keynes Technology, because it is clearly showing a green candle and it has moved up above all the moving averages. I think one can actually take a short-term trade with good 5-6% gains that can happen here.
Well, those are the stocks that are getting ready for a sharper up move. Rajat, I'll stay with you on a few more stocks that are catching our attention. Small company, and I know they're not in the FNO space, but Matrimony, Aadhar Housing Finance, how do both of those look? Because those are also trading quite well as we see it.
See, Aadhar has opened with a gap. And it is showing traction. Once it crosses, say, 411 to about 415, then you can expect it to move up to something like 424. And the other stock was Matrimony. Well, regarding Matrimony, what I would say is that Matrimony, there is no trade out here unless you have already taken a position much earlier. You plan to book some profits, fine. Otherwise, don't buy this gap, because it could not sustain at the higher levels where it opened around, say, 840 or so, and it is coming down. It will fill at least most of the gap. So Matrimony is not a buy, but Keynes definitely is.
You just keep in mind that a buyback, what quantum of shares get bought back is a big factor in what kind of gains you will make if you go out and buy a stock after a gap up on the announcement of a buyback. Usually the acceptance ratios are very small, so calculate the acceptance ratio very carefully before you go out and try and trade a stock, because the buyback price is much higher than or a very attractive price relative to the current market price. So that's one. Now, Sunny, fundamentally to you, on a stock that was doing very well yesterday and continues to do well today, Sona Comstar, very expensive auto ancillary name. Are you constructive here, or are there cheaper auto ancs available?
So what happens is that nowadays companies which are reporting a very healthy earning growth, there we are seeing that the expensive valuation are definitely sustaining, and that's the case with Sona BLW also, consistently reporting a robust number. At the same time, order book continue to remain pretty robust. In terms of valuation, yes, trading at an pretty expensive valuation compared to other auto ancillary name. I think other names which we discussed earlier, like companies like ASK Auto, for that matter, Endurance, Sansera Engineering, Sharda Motor Corp. So these are the few names which are trading at a relatively cheaper valuation. Again, a proxy play to more of a two-wheeler passenger vehicle name. So these are the few names which we like among the auto ants sector.
A few names you like. Sunny, what are you doing with FMCG stocks right now? Tactically, do you feel like this is a good space to be in? And while you're talking about it, let's throw in pharma and IT as well, because both of those sectors have been supporting the markets quite well in the last 3-4 weeks.
Yeah, so FMCG, yes, definitely there is a hope that post very good monsoon, which is panning out right now, the rural demand is something which will kick off during the second half, during the festive season. And that is leading to a lot of positive sentiment in the entire FMCG consumer staple names, whether it is HUL, ITC, or a case in point, Tata Consumer. So yes, we remain constructive on FMCG names. At the same time, a few unknown players like Patanjali, where we have seen a merger of Ayurvedic portfolio with Patanjali, that even there we find that earning growth is likely to be healthy. Tata Consumer, again, following strategy of organic as well as inorganic growth. There again, earning growth can be slightly ahead of the peers. So these are the few names which you like among the consumer staple. Consumer discretionary, I think jewelry is a sector which is clearly one outperformer, whether it is in terms of strong tailwind or in terms of operational delivery. So I think within jewelry, players like Kalyan, Senco can be looked upon. Moving on to the IT sector, yes, IT is again, since we are in the September, and on 18th of September, US Fed meeting outcome will be there, and the street is hopeful that with a rate cut cycle hence to kick off from 18th of September, we may see demand environment further improving in the developed markets like US and Europe. So yes, IT definitely risk reward is favorable, valuation are comfortable in a large cap IT name. So SCL Tech and Infosys is these are the few names which we like among the large cap IT. Pharma, yes, pharma again very similar to IT and FMCG, where we have seen a decrease in pressure on price erosion in the US market. At the same time, domestic market continue to do well. So pharma is again a place to be in. Companies like Lupin, which is yet to cross, I believe, its lifetime high, are delivering very robust set of number. Cipla, among the smaller name companies like Markson Pharma, Shilpa Medicare, Natco Pharma. So these are the few names if you like among the pharma.
All right. Thank you so much, Sunny. Thank you so much, Rajat, for speaking with us this morning. It's looking like a decent kind of start on the street. Quiet, a little bit of, I would say, flagging of energies at the start, but not negative by any stretch of the imagination. Just flat completely on the Nifty. Gurmeet Chadda is joining us, managing partner and CIO at Complete Circle. Gurmeet, great to have you on the show as always, and always lovely to chat with you. You know, I'm going to start by talking to you not necessarily about today's markets and stocks and sectors. We'll come to all of that. But I want your take on the whole IPO outlook, and especially SME IPO outlook. A lot of commentary coming in from Ashwini Bhatia, also yesterday, whole-time member of SEBI. You've had a SEBI note on the way investors are behaving post IPO. 50%, more than 50% just sell in the first week. What is it telling you? Is this the marker of froth in the primary market, or too early to say that?
No, there's clearly froth. I know some of the Delhi-based companies, some of them do very basic civil work. They are launching IPOs. Somebody, is into pipe fitting. They are talking of water management. I think in a lot of cases, I think even the numbers look a little tricky. I'm not saying all SME IPOs are bad. I think that it would be bad to generalize everything. There are obviously a lot of good ideas. But obviously a lot of not so good names with the purpose of making quick money are coming in. And I don't blame the promoters alone. I think the investors equally. I mean, 50% of them exit within a week. To be fair, even the IPO, which made a lot of headlines, they only priced it at 21 crores with 2 crore kind of a PAT, 1.5 crore. So retail will subscribe 500 times on that IPO. So I think, you have to be careful. You don't know when the music stops. And, in Delhi, we say that, if you are in a midnight party, be closer to the gate and not in the center when the party is going on, because you never know when you have to actually, end up paying the entire bill.
Right. Gurmeet, well, that's more macro, and I sort of view coming in, not too much in terms of actionables, but tell me, what have you done with these recent IPOs? Have you subscribed to any one of those? Talk to me about the new listing today. Premier Energies, 100% gap up is expected. Now, this one's going to be phenomenal in terms of listing. And while we are at it, you had Ola Electric recently. You've got Bajaj Finance Bajaj Housing around the corner. In a few months from now, you may even have Swiggy, which has become the talk of the town in the unlisted space. Any of these that are catching your attention or have caught your attention?
The only one we added post IPO was Zomato. It's been a decent run for us. I think it was the turnaround for us was the quick commerce. They've already reporting 1,000 crore kind of a revenue. My sense is that in a year from now, that also should be a bit of positive. I think, and that's where the runway is 50-60% kind of a growth, because food delivery now, Zomato already has almost 8 crore plus transacting users. So that can now grow at 20-25%. The market is the penetration. We have 21-22 crore households. So, and 8 crore people are already registered there. So, the growth could be 25-30%. I think the quick commerce is something which I think can grow and has very long legs. And I think the government positioning also, government is not very happy with the way Amazon and others do deep discounting. Quick commerce is more integration with the local ecosystem and more on convenience. And with the ticketing business, I think that should do well. We are tracking the Bajaj Housing IPO closely. This could read some of the other good names also. So even if you see at the upper end of the band, it's valued at about 58,000 crores. And they have almost 8 crore kind of, almost 76, 77 million kind of a customer base. Very good ROAs. Bajaj is known for excellent, analytics. And I think there's a lot of focus on affordable housing. One rub-off could come on some of the other HFCs like PNB Housing, already run up a little bit. But if you see now, the corporate book is just 3% of the assets. trades at 1.1 FY26 price to book, so amongst the cheapest there, and it has the ability to continuously do 2% plus kind of an ROA. And the legacy book almost now, the corporate NP is almost nil. So the book is expanding very granularly. So there could be some rub-off there as well. So these are this is the one which I'm looking at. And obviously it has a impact on Bajaj Finance now, because which we hold that in our portfolio. It was a bit of a laggard. Bajaj Finance has sharply moved up. And my sense is a lot of good NBFCs will move up as interest rates get cut and bond yields come down.
You said you had Zomato and you still like Zomato, and in that same breath, I don't know whether you mentioned what your thoughts on Swiggy were, but it's getting a little bit of attention, with this constant conversation about them looking to file a DRHP, a listing expected in a few months. This morning, Hindustan Composite from its treasury book, I think, has gone out and picked up a little bit of Swiggy. What do you feel at 340, 350? Swiggy looks good at a 10 billion valuation. I know they had a down round a few months ago.
Yeah, it's almost, I think, close to 75,000 crores. If you see the last round at about 325, 340 is where the unlisted prices are. My little bit concern there is on the Instamart, and I think it's not done as well as they would have wanted it to do. Zomato is already talking of 2,000 plus dark stores. Instamart is still much lower. In fact, Zepto is actually doing a little better as far as our little bit understanding and channel checks go. So I would like to wait it out. I mean, in the unlisted space right now, we were doing NSE post bonus issuances. Obviously, there's been a sharp move. Another one we have recently done is the OYO. So that was available at a very good rate at almost like 30 rupees. So unlisted space, pre-IPO space is hotting up, but investors should remember that space does not have liquidity. A lot of us have forgotten what happened with the Tata Tech IPO. Grey market was trading at 1,500. The IPO came at 500. The stock is still at about 1,000 despite a stellar listing. So the best of the names, if you only enter that pre-IPO space is hot, you should come and you should take advantage of it. It A, has liquidity issues. Second, the prices are all over the place.
Gurmeet, let's move to some of the themes in the market today. Is it too early to herald the return of the defense story with one HAL and then a whole host of them running up as well? The sense being that after about a 6-month lull due to pre-elections and then transition to the new government, etc., now they're back in the saddle and all of those allocations will begin. Is that an idea you're on board with?
I think you got to be selective. I think you should also see how they have run up. I mean, last 6 months consolidation is good. I would have probably wanted some price correction to probably take more positions. HL in particular, I think the today's is because of the news of 220 odd cryo engines being supplied to Sukhoi. They also are facing a bit of an issue in terms of executing the Tejas order. See, in a lot of these, fighter jets, etc., there's a lot of risk in terms of execution. There are a lot of risk clauses. There's the risk of, orders getting called back, some compensation clauses if they don't meet specification. It's a very technical business. And right now we are just, we are happy just keeping a multiplication to the stock just based on the order received. And the business is lovely. But in HL's case, because 2/3 of the revenue comes from service maintenance, it is a little more stable. And if you add this current order to already 1 lakh crore kind of an order backlog they have, it's almost 4 times their 12-month sales. So I think HL in particular, I think, looks good. I would be happy if I get a little bit more price correction in terms of making fresh exposures. We like solar industries also, which is a combination of chemicals and defense trade. Defense is just 10% of the book. Our sense is in the next 2 to 3 years, solar, defense book could be 25-30%, and they are doing some very good work on Pinaka rockets, on hand grenades, on a lot of defense stuff. Also, there's a lot of companies which will benefit because of the offset clauses. So, almost 50,000 crores worth, there's a 30% offset clause. The unutilized amount is almost 43,000 crores. By FY27, this figure would be 80,000 crores. And there are just about 20 odd companies which are notified, which are eligible for this offset clause. So if you research well, you might get more opportunities slightly lower down the value chain in terms of the smaller companies, in a lot of spaces, including sensors, including drones, including a lot of other electronic equipments. So I think you've got to be selective. And our exposure right now is between Solar, Zen Technology, and HAL.
Okay. Gurmeet, good morning, Niraj here. Gurmeet, post this earnings season getting over, what between the reportage of earnings and the commentary, relative to valuations, of course, has excited you the most?
It's actually made me a little nervous, Niraj, Q1, if you ask me. Because if you see BSE 500 as a universe, the EPS growth has been sub 5%. Almost 250 plus stocks are now at 50 PE. Now that's not great news if the valuations are what they are. So as I said, you got to be a little more selective. One space which is looking good to me is healthcare. Also, one thing I've liked about pharma is that it doesn't make too much noise. And if you look at last 5, 10, 15, 20 years, it's beating Nifty 50 almost by 1.5%, and across time periods. And if you see the beta on the downside is just 0.5, so it actually falls half whenever there is turmoil. We saw that, recently, just about a few weeks back during the yen carry trade unwinding. The representation is only 5% on BSE 500 index, which is almost equal to HDFC Bank. So my sense is that there are a lot of opportunities, and that this biosecure law likely to be a reality in US. It could open up huge opportunities, both in APIs, formulations, and a lot of CDMO names. We are lucky in terms of having some exposure to Newland. That's done quite well. Where we haven't probably done well is Laurus Labs. But we're looking to add more names. We added Mankind Pharma post the acquisition when the stock went down. That's more in the branded generics place. And now they are cementing their place in women fertility. I think that's one area which is, if you see around you, you will see so many fertility centers going up. It's a genuine problem. And the company they've acquired has serious skill set in that. And we might look at some companies in generics as and when this, the biosecure law takes final shape.
Amit, what are you advising your clients to do right now? If somebody with an average risk profile, are you telling them to sit on some cash? Are you asking them to continue allocations to the STP route? I'm just trying to understand what does an investor do? Take profits off the table, add incremental cash, and also in that same breath, is the bias now on the large cap space? Because we've talked for months about how large cap should play catch up, and we're now seeing early signs of that happening in the last few weeks.
I think some mean reversion should happen and must happen because Nifty is still 19 times if you take forward earnings. And I'm not saying it's cheap, but it's still slightly above the long-term average versus mid and small cap, which are 24 times and 26, 27 times. Our call has been, I remember speaking to Niraj also some time back that the long end bonds made a lot of sense to us around March when the yields were around 720, 725. It's still at about 685, 690 range. My sense is that you will see 10 years, he said, closer to 625, 12 months from now. We may have a shallow rate cut cycle, but we'll still have 50 to 75 basis points. We are also getting $2 billion kind of monthly flows now with the inclusion in the global bond index, which means a long-dated bond, the yields can soften by 50 to maybe 75 basis points, which could mean a mark-to-market gain of 4 or 5% above your coupon, which is closer to 7, which means you can make double-digit return in a bond fund with let's say, a 12, 18-month view. We've been asking clients to add a little bit of gold with the kind of turmoil we are seeing geopolitically. And, some impact can happen when Fed cuts rates, maybe a little bit of devaluation of dollar. Not too sure, but in general, I think the outlook on dollar is not that great, considering what US is going through, record deficits. So gold and long-dated bonds we have added in the portfolio. It has given returns. Second, it also reduces, your beta a little bit on the downside. And we are selectively advising some good themes where we see rotation coming in. Financials are making a lot of sense to us, so we are adding more there. We are rotating it. IT made a lot of sense 6 months back. Nobody wanted to touch IT. Infosys was 1,200, TCS was $3,000, HCL Tech Mahindra was sub 1,000. So it happens always. You've got to be a little ahead of the cycle sometimes. That also means you may have to take a little bit of underperformance. To us, I think financials, NBFC especially, and some banks are making a lot of sense. And selectively, we are adding, as I said, bottom-up stock themes, including in recycling space, including a little bit in data center themes.
Gurmeet, just wanted to get your take on a couple of sectors that are buzzing. Auto is one of them, and the numbers that have come out for the last month have at least put the two-wheelers squarely in focus. Bajaj, TVS, Hero. What is your ranking over here, and are you finding passenger vehicles less interesting relatively?
No, it's just that the stocks have run up a bit. It's not less interesting. If you just see the movement in Tata Motors and M&M last 2-3 years, I think it's probably would have been as good as some of the small mid caps or even defense names. So incrementally, we added TVS Holding, which was a holding company of TVS because of the special situation in the stock. It was getting split into three, which was the holding company, Sundaram Clayton, and a preference share. I mean, that's yielded great results. I remember before the split, the price was 4,500. You already have almost 14,000 on TVS Holding. We have Sandhar Technology as one of the ancillary plays there. It makes frames earlier it was just a one product, one supplier. It only used to supply to Hero, and that too largely locks. Now they have become, they have a very good portfolio now. The EV portfolio, they have great guidance on, looking at almost 1,500 crores there over the next couple of years. They also make frames for large good selling models like TVS Raider. A frame typically costs about 35,000 bucks for a motorcycle, and they are getting into cabins, fabrication, tooling, etc. So it's a very diversified portfolio now. We are looking at Bajaj, especially that this is one platform which has all three, which is the IC engine, the flex engine, which is ethanol, as well as the EV portfolio. Chetak, as per channel checks, is getting very, very good response. Once you see more variants, etc., the number for both Bajaj and TVS iQ can actually pick up. So these are the things which are in our radar as far as the auto goes.
Thank you very much, Gurmeet. Good talking to you, getting some perspective on IPOs, what looks good, what doesn't, what sectors, and what sort of a portfolio strategy one should be adopting in the current market backdrop. Thanks for joining us. One of the company that's on the radar and has got a couple of aggressive buy calls as well coming out from brokerages is Gulf Oil. They seem to be growing quite well, growing at double the pace to the industry, increasing market share. They're focusing on new businesses and a lot more. Manish Gangwal, Chief Financial Officer of Gulf Oil Lubricants India, joins in. Manish, good morning. Thank you very much for joining us today on the show. You seem to be on a fast track with Gulf Oil. Your core lubricant business is growing at double the pace of the industry. AdBlue is also doing exceptionally well as we see it. And the industry as whole is growing too. So it's, of course, two things working in your favor. Let's start with core lubricants, right? What is the anticipated growth that you are working with over the next, say, 3 to 4 quarters? And also, where does your market share stand today in core lubricants? And where do you see that at the end of this financial year and at the end of 3 years?
So, good morning to all of you. First of all, thank you for having me on your channel. Yeah, you're right. We have seen a very good growth coming back post-COVID in terms of the lubricant sector, and for Gulf Oil, our company especially, where we have been, traditionally we have been growing 2 to 3 years the market growth, and that has been the trend for last 10 years. And we have continued our journey even on a higher base of growing 2 to 3 years the market in terms of volume. And for that matter, the Q1 performance has also come very strong at 9% revenue growth and 29% PAT growth on the back of 3 very good quarters in the last year, where we hit centuries of EBITDA in the last 3 quarters of last year. So overall, yes, good traction coming back to lubricant sector, and as you rightly mentioned, the lubricant sector is going to continue with, we have been telling, and some of the global experts have also been echoing our voice that yes, the lubricant demand is going to continue for the medium to long term, and it's while there will be certain decarbonization efforts in certain segments, but overall the demand for lubricant is going to continue to remain at this 3% volume growth level, which has been the trend for last 10 years. So overall, yes, the positivity in the sector is back, and of course at Gulf Oil we have been doing continuous work on increasing our distribution for B2C, gaining new customers in the B2B space. So overall, yes, we are doing better than the industry 2x, and Our market share also currently is roughly like 5-6% overall on the lubricant, core lubricant side. So we have a lot of headroom to grow our aggressive trajectory of 2 to 3 years market. So the market share at 6% gives us a lot of headroom as well.
Right. And where do you see that market share go up to? Manish, I understood the point that the industry is growing despite decarbonization. You're growing at double the pace. From what I get is your market share is in the range of 7 to 8%. Where do we see that go in 3 years? And also, what are the margins you enjoy in this business? Is it strong margins? Is it on the upper band? Is it more of a revenue focused business? Give me an understanding of the kind of business core lubricants really is for Gulf Oil.
So overall, as you said, we have a 6% market share on the total lubricant side, but we have pockets of growth where we have less than 5% market share. For example, in industrial segment, for example, in passenger car segment. And these are high growth focus areas for us in terms of premiumization, in terms of moving the curve ahead. And overall, in the Bajaj segment, which is the lucrative, brand play segment for B2C, where you have, more than 200,000 shops across semi-urban, urban India. There we have a slightly higher market share of around 7%. But that said, we have a lot of headroom and growing at 2 to 3 years the market, we have been getting market share across. And we continue to aim, last 10 years, our market share has more than doubled. And we believe that the journey of gaining market share, continuing to gain market share continues for next 5-10 years. For us, because there is a lot of headroom. And of course, there will be selective pockets of special focus, like I mentioned, passenger car and infrastructure is also growing significantly in India, and the government spending on infra is going to continue for next 10 years. And there we have a very good market share and we want to consolidate our position further. So there are many areas of, pockets like agriculture segment where we have again sub 5% market share and rural is doing well now. So all these areas are high focus areas for us for overall lubricant growth in terms of trajectory for the next many years.
Manish, I know that data center and cooling liquids is a segment you ventured into and you're looking at a strategic long-term growth map there. From what we understand, the capacity that India holds in terms of data centers is only 3%, so the room to grow is significant. Tell me, what does cooling liquids do in terms of your top line, in terms of contribution? What is the growth you're working with there, and what is the sort of margins you enjoy here? Because these are new businesses, right? And the potential to grow is so much more, largely because there's a very low base here.
Yeah, so you're right. Data center has come up as a good opportunity in the recent past, and considering India's focus on AI and thereby creating a lot of capacity for data centers. It's an interesting opportunity, but let me tell you, like we have been highlighting earlier also, this is an opportunity which is a very niche opportunity. Overall volume of data center cooling liquids, because currently most of the data centers are air cooled. And when they transform to liquid cooling and assume that 100% of the data centers are on liquid cooling basis technology, we are still going to talk about, around 1 to 2% of the total lubricant volume coming out of that sector. So it's a very, very small segment of the overall pie, but it's a good segment to be in because it's a growing segment. And at Gulf Oil, we have been continuously working on creating some good products for this segment. But right now the opportunity is very, very, very small.
Mr. Gangwal, hi, Tamanna here. Just so data centers is niche, it's new, maybe something in the future. You're also looking at EVs as one space. Give us a sense of the size of that business and how much of a component or how much requirement is there for the product in EVs? Is that growing? Give us your overall look there.
Yeah, so I think while we say that lubricants are going to continue to grow, what the growth rate has been for last 10 years will be for next 10 years also. At the same time, we also believe at Gulf Oil that there will be certain areas where EVs will take certain portion of the market, and especially in the two-wheeler segment and bus segment, there will be some penetration of EVs going forward, which is good for environment as well. And with that thought process in mind, we have made few investments in EV space, and we have made an investment in a AC slow charger company which is based out of UK. We have made an investment in a software as a service company which caters to electric vehicle segment named Electrify. And another recent investment last year we made in November was in a company called Tyrex, where they make DC fast chargers. So we have made few moves in the sector. These are growing segments, and we believe that especially the DC fast charger segment in India is going to grow rapidly, because there will be the government buses, STU buses, which are going to be converted to EV in certain proportion over the next 5-7 years, and they all require fast charging. And Tyrex is well suited in that place. Tyrex currently have more than 1,000 fast chargers already installed and running across India, and all our products are highly successful. And that is where we believe that Tyrex as an opportunity in DC fast charger segment can be a very significant opportunity for us. We believe that the market of fast chargers by 2030 should be at least $1 billion plus. And that makes, and with 8 to 10%.
So Mr. Gangwal, so the EV play of it, which includes fast chargers, all of the paraphernalia around it, what is that going to be in terms of contribution to your revenue going forward?
Yeah. So as I mentioned, $1 billion plus opportunity by 2030, and we aim to have at least 10% market share. So we are looking at roughly 500 to 700 crore of top line at least coming in next 4-5 years from this charger segment.
Yeah. You come from an industry that is rather fragmented, Mr. Gangwal. Any sort of inorganic plans that you have, any acquisitions, mergers? Because you are going into new businesses, and the fact remains, while you're significant in the old business, the future really sits in the new business place. Are you eyeing any sort of mergers to sort of achieve that target of 10% of $1 billion?
So overall, we keep looking at EV value chain across categories, and we evaluate regularly the opportunities which are coming either by way of partnership or by way of acquisition. And in our core lubricant segment, we generate a lot of cash, and the cash is being planned to be utilized either by way of investing into the upcoming EV segment, which, as I mentioned, we are aiming at 500 to 700 crore of top line in next 4-5 years. Or obviously we have increased the dividend payouts as well. So yes, we are closely evaluating battery swapping space in terms of EV or other EV value chain opportunities, because we have a strong brand which auto consumer knows. So considering that in mind and our relationship with OEMs, auto OEMs, we are continuously evaluating the space.
All right. Thank you so much, Mr. Gangwal, for speaking with us. So Gulf Oil in focus, exciting things happening, data center cooling, EV business, all of them, of course, newer forays. But that's really all the time we have on India Market Open. Stay tuned, though. A lot more coming up on the other side on Talking Point. We're also going to be speaking with Bajaj Auto on their numbers, their sales numbers, which have come out last month. Keynes Tech, stock of the day in terms of buzzing. They've got their permissions from the cabinet for their semiconductor plant in Gujarat. We're going to be speaking to that management as well. So stay tuned for all of that coming up after the break.
Welcome back. You're watching Talking Point. Well, the markets are having a quietish morning and consolidating on day 13, or rather the day 14 of gains. It's premier energies that we may not be able to keep our eyes off. It was oversubscribed by